Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon and a very happy Monday morning. We're looking at Bitcoin to the US dollar, 4 hour chart. Oh, before I forget, guys, again, a big thank you to everyone that has left tips, guys. Always appreciated. Most of you guys seem to like to send me emails, and if you always want to send me an email, ask for a private tip donation. That is our tip donation address. I'm very happy to do it. Like I said, guys, just very appreciative. But as always, guys, never feel obligated. This is not why we have this channel. Have this channel just as a way to give back to the community and as a way for this community to kind of share with each other and hopefully learn from each other, guys. And it's just been a wonderful community. I really appreciate all the love and support you guys have shown me. A lot of you in the comment sections publicly, a lot of you writing me privately via email or direct message on Discord, Twitter, or Facebook. So very much appreciative, guys. You guys are just a phenomenal group. Again, I make no money on these videos, guys, nothing at all. This is completely supported by your tips. And again, even without those tips, guys, I would still continue to do this as a way to give back. I just really do appreciate everybody here in all of your comments and contributions. So just anyway, want to go very quick thank you. Let's go ahead and dive into why you guys are all here. Looking at Mr. Bitcoin here, absolutely in all his glory. 4-hour chart on Coinbase. Last time we spoke, Bitcoin was operating within this wedge. Told you guys to expect a larger move as we approach the apex of this wedge, guys. And of course, we did end up breaking to the upside here. Now, this isn't the quote-unquote breakout that we were all waiting for quite yet. We'll have to wait and see how this plays out. As I said yesterday, as I commented earlier in the comment section before making this video on YouTube, I said to watch out for that, watch out for a bull trap. And I told you that if we were going to see a bull trap on a breakup, it was going to be right there at about that $12,000 zone. We did break up. We did hit literally almost to the dollar, very close, right around. Actually, was it 12,000? What was the high here? Actually, that's what, literally to the dollar, coming up and hitting 12,000 and rejecting right at 12,000. I'm not going to take a bow, guys, but anyway, no, a lot of people saw that, guys. I mean, it was very obvious looking back here, seeing this prior high. That's where we were expecting that probable hit. Of course, we did see that, guys, and it's going to be very telling to see how this thing does end up playing out here in the short term, guys. But again, I'm not entering into any small positions, small scalp trades here and there as I have been, guys. But nothing major until we do clear this $12,000 zone decisively. Begin by decisively, I mean a 4-hour open and close. If and when we do get that, guys, of course, then I'm going to be looking to front run this thing, targeting at least 13,000, maybe 12,800 if I want to be a little more conservative, depending on how we get there, but more likely 13,000. And I do think that we'd very likely continue up here to test this all-time high, or excuse me, not all-time high, this prior high for 2019 anyway, at $13,850. So let's wait and see how this plays out, guys. We have not broken out yet. Want to be very clear on that. This is why I told you guys to always wait for confirmation, and hopefully you guys have done that. If you haven't, no problem. You guys are more than likely still in profit. I would just highly recommend that you increase your stop losses and just make sure that you don't get caught in in any kind of a bull trap here. With that said, my bias now is to the upside. As you know, I was slightly leaning bull yesterday. Definitely leaning a little bit more bullish today with this breakup. Let's wait and see kind of how this ends up playing out, guys. Certainly not all the way bull or bear, or excuse me, all the way bull yet. Definitely not bearish yet, but certainly not all the way bull. I just redrew this trend line, which I understand is extremely frustrating just to see an analyst just redraw a trend line here. But I can't ignore the fact that we do have a very clear top, tested once, twice, 3 times, and now 4 times, and they're all slightly descending resistance line there. Actually, this last one, very close. As I said, almost to the dollar, this prior high, which was just slightly higher at about 12,064. So still technically that slightly lower high. That being said, of course, very close to this. So going to be watching this trend line very closely, and of course we can extend our trend line out here. And as we see that, if this does continue to consolidate here, I may continue to try to scalp this thing, possibly coming back down, shorting down to 11.5, possibly even a little bit lower than that. I'd probably get out a little bit earlier than that, though. I'd probably get out around 11.5. and then of course targeting the top of this trend line here, and I'll just play that range until the range does get broken, guys. So that's kind of, again, if you're not an experienced trader, I don't recommend you do that, guys. I recommend you just keep things simple. Wait for that break above at least 12,000, then you're going to want to look for that larger play to the upside. Until that happens, guys, always protect your money, always protect your fiat. Without that fiat, without that money, yes, you may miss some moves here and there, but there's so much opportunity going forward in this market, guys. You want to make sure you have capital to make sure you can play off that opportunity. All right, checking our moving averages, exponential moving averages, guys. We can see that we are coming up, testing top of the Bollinger Band. That's where we are finding some resistance. Nicely above the 8 EMA, 8 EMA above the 21, above the 55. This is on the 4-hour. We're starting to see those fan out. Very, very bullish sign. Let's go ahead and check the daily. Daily, well above the, well above the 8-day EMA here. Pardon me, guys. Stand by. I got to get a drink of water. Okay, sorry about that. Throat was parched. Okay, so well above the bouncing above the or well above the 8-day EMA here, guys. We can see that we did bounce, as I talked about ad nauseum in past, guys. We did bounce right off the 21-day EMA here. Came back down for the retest. Didn't even make it down to the 21-day EMA this time, bouncing right off the 20 simple, right there in the center of that Bollinger Bands there, which is also the 20 simple moving averages for those that don't know. Bounced nicely off that zone, guys, and of course we're heading up now. So again, this is bullish, starting to see more light between the 8 and 21, and of course nice light between the 21 and the 55 down here. Very, very bullish setup, looking very nice as of right now. Again, nothing really confirmed yet, but I have to say I would tip my hat in favor of the bulls in this case without question. Looking at the weekly, again testing the top of the Bollinger Bands. I'd really after this just nasty shooting star candle back here on June the 24th, the week of June the 24th, guys. I'd really like to see price just start to stretch out the top of the Bollinger Bands here again. I'd really like to see that this candle start to trade up above the prior close of last week's candle, guys. I'd greatly like to see that. Let's wait and see if it plays out. And of course, we're looking at staring at this this high here that needs to get taken out to confirm that uptrend overall. But for now, definitely looking strong, guys. Again, as I pointed out on the weekly, we still have not tested the 8-week EMA since June the 10th, the week of June the 10th. So again, very bullish sign, even on this pullback here, guys. Even on a 30% pullback, not testing the 8-week EMA. Again, very bullish sign. A lot of light between the 8, 21, and 55. Nothing but bullish there. Checking longs and shorts. Shorts, a little bit of an uptick, a little bit of life showing with that latest move there. Nothing too significant at all. Long starting to stack a little bit more, but again, nothing too significant right now at all, so I don't want to read too much into longs and shorts whatsoever. Checking our volume. Did we break out on volume here with this latest move? Yes, we did. Coming back here, let's confirm it on the 4-hour. Or zooming into the hourly, let's confirm it. And yes, we have confirmed that we did break out on volume, so this move is to be respected as of right now. That being said, as I said, we do have a clear trend line here. Even though I know I redrew that there, we did break out from yesterday's trend line. We do have another trend line here that is to be respected, given the fact that we came up, literally hit it perfectly, and we're literally dancing right below it. So as of right now, it is to be respected. We do have numerous tests of that trend line, guys, so I want to make sure that I'm very clear on that. But we kind of knew that yesterday, as we pointed out very clearly, that $12,000 zone that had to decisively get taken out, which has not yet decisively been taken out. So we kind of knew that. But looking at the daily chart, pulling all the way out here on the daily, we can still see that, again, this is why I say we have not had a confirmed breakout whatsoever. We can still see the volume is still slowly starting to decline here, or continuing to decline here, guys. No major breakout in volume as of yet. So again, this would suggest that price still consolidating within a range here, still getting ready for a likely move, a likely larger move to the up or to the downside. We're hoping to get that larger move yesterday. Didn't break up above that 12 as of yet. Does look like we may end up seeing it today, but if I look at this new trend line and how we drew it here, guys, and really there's no other way to draw this trend line. So if this does end up breaking up, guys, it's not like I can redraw this thing again, because you really can't. So it looks to me like we would very likely break out, either probably a larger breakout, probably in the next 48 hours. Again, I know that's frustrating to hear. We were hoping for a breakout. Yesterday I said within 24 hours that breakout was not the larger move that we were hoping for, even though we did break out just slightly. Not the larger move that we were hoping for. And actually looking at this, guys, you could make the case that, let me just see something. You could make the case that we are kind of drawing, yeah, I mean, I have to take some liberties here. And yeah, I mean, maybe I just draw it right like this. Yeah, having to take a little bit of liberties, guys. But again, this would bode well for the bullish case, starting to look like kind of an ascending triangle here, possibly. So a bit of a sloppy one, albeit, but nonetheless, in my opinion, definitely more bullish than bearish, without question, guys. Again, my bias does lean to the upside, and of course, we'll get that confirmation if and when we do break above 12,000. I like this a little bit more, though. I really, really do. But we'll see how this plays out. Regardless, my bias does lean to the upside. If we do take out 12,000 decisively, again, we're looking for a move to at least 12,400. That's going to be that's going to be where most people are looking for a confirmation of a breakout and then continuation to the upside. But again, I'm looking at more 12,000 as a front run. I do think that's a, if you're just looking at a basic risk to reward probability, I do think a decisive break, let me be very clear about that, a decisive break above 12,000, a 4-hour open and close above 12,000, I do think that'd be a good signal to front run this thing, and I do think that probability would shift in favor of at least coming up and testing about 13,000, somewhere thereabouts. Doesn't mean it has to happen, guys, just means that's kind of what I'm thinking. Not financial advice, not a financial advisor. You guys do what you want to do, just giving you an idea of what I'm looking at. Now, I want to address something. Looking at the bigger picture here, this is looking all the way out on the weekly chart. I want to address something because I keep getting these. I keep getting these questions. Just recently had somebody, and I don't mind the questions. I really, really don't. And most people are respectful, and I do appreciate that. But I'm getting these questions about how people can't believe that I'm looking, that my bias is big picture. My bias is leaning bullish. That I do think that the bottom is very, very likely in. When we created this bottom back in December of 2018, I do think that was the bottom, and I do think that we are now continuing to the upside. Doesn't mean we can't get a larger correction, of course, but I do think that the bottom is in. And a lot of people are saying, no, this is a bear market rally, and they don't understand how I don't see that. And there are two major arguments that they're using for this. And let me be very clear. I'm neither a perma bull or perma bear. I do believe that we have started a bull market. We have started the bull market. That being said, if I'm proven wrong, I'll be the first one to say it. So if we break down below about 6,500, I will start to believe that maybe this is a bear market rally, and maybe we are coming down to create newer lows, and this was not in fact the low. Again, I'll be the first one to say it if that happens. I am not perfect, and to be honest, I'll trade this thing either way, guys. You never want to put all your money in one section. You want to be very, very careful, very, very flexible, and be able to make money in either a bull or bear market. So you need to be flexible with your portfolio. That being said, I don't understand the people that are so dug in to this being a bear market rally that they can't even acknowledge that maybe this is a bull run. And I need to just point out some very simple things. There are two main arguments that people are using for this being a bear market rally. The first one is we didn't even acknowledge the major areas of what should have been resistance on the way back up, and therefore this is a bear market rally. Well, yes, the only one that you could say that about is the $6,000 range. And yes, the $6,000 range should have been acknowledged. I completely agree with you. That was very, very surprising that it did break up. But that being said, it's not the first time Bitcoin has broken up through major, major areas that should have been resistance and completely ignored it on its bull run. It's not the first time at all. Go back all throughout history, you can see Bitcoin breaking through major areas of what should have been resistance on major bull runs or on major parabolic moves. So yes, it's surprising in that I was one of those people that expected to find at least some resistance somewhere between 5,800 and 6,500. I absolutely expected it. Didn't happen. Okay, so it didn't happen. So, but then. Look at every area since then. Ever since that major $6,000 zone, the next major zone would have been what? Would have been this prior swing high right here in July of 2018. What happened? Price came up, rejected that first week in May of 2013, then slightly broke up, and then of course we kind of snaked around it, and that was the major area, or not major, that was the area that it corrected in before its next leg up. So it absolutely acknowledged that area right there at about 8,500. In case you question that, let me just go ahead and zoom out to the monthly, where you can see on the monthly that 8,500 was very clear. There was the top, and that's where it split. This was the month of May. This was the month of June. Literally closed right there at that $8,500 zone. Literally opened and found support right there at that $8,500 zone in June. So what was resistance turned into support. So it absolutely acknowledged that area without question. That I don't know what else to say about that. So then, what's the next major area? The next major area would have been right here, right? And of course, this major area was obviously slightly acknowledged, not too much. You could say that it broke up above and then came back down and tested it here, acted as support, and then continued up. Then we have this major area right here at about 11,500, and we've been snaking around 11,500 here for the last 1, 2, 3 weeks. And if we break above, it'll be the first time. So it's absolutely acknowledging this area as well. Then what's the next major pivot? The next major pivot would have been right here. Price came down here, danced on top of about 3,700, 3,800 for literally 1, 2, 3, 4 weeks before breaking down here in January. And then that area acted as resistance there in January of 18. So clearly this was the next major relevant zone. Where did price literally reject right to the dollar? Right there at that 13,800. And in case you question that, let's go ahead and again zoom out to the monthly chart. Literally closed right there, and almost to the dollar. That's where it found its resistance. So again, every major area since 6,000 has been acknowledged. And if I go swing high, swing low, it literally got rejected right inside the golden pocket between the 618 and the 65, right where you would expect it. So there is a lot of technical, a lot of structure into this thing. This isn't just a complete parabolic move that hasn't acknowledged anything and makes no sense. It makes a whole lot of technical sense, So again, I'm not saying that you're completely wrong. You might end up being right. And I will say the best argument for this being a bear market is that we rejected right here inside the golden pocket. And typically that's where you would see on a correction, you'd see that rejection, and then you'd see a continuation to the downside in this case. Because we're rejecting, to the upside, we're continuing to the downside because we're rejecting right there off that 618. And if that's the case you want to make, that's your best argument for this being a bear market rally. But we haven't seen follow through yet. Doesn't mean we won't. But I will say, if we do decisively break up above this 618 area, this area between the golden pocket between the 618 and the 65 fib level, if we do get a decisive break above that, and I would define in this case a decisive break even a close on the weekly or a daily open and close above that zone, I would call that a decisive break. And at that point, hopefully, that would put to bed anybody saying this is a bear market rally. But until that happens, I would say that your argument is not. It would have some does have some validity until we do take this out. It absolutely does. But again, you can't say that the bear market that this being a bull market rally doesn't have any validity either, because I'm just pointing out to you all the structure that it does in it. So you just can't ignore the other side. I would just say be a little bit more open-minded to this possibly being a bull market. And now again, it doesn't mean it has to be. But you can't say that it didn't acknowledge anything back here. All right, now the other argument to this is, and now I'm taking the chart all the way back to the last. Let me see if I've got this. There we go. I'm taking the chart all the way back to the last bear market. Okay, so this was the top of the last prior to 2017. This was the top of the bull market back in 2013, and the top was in November of 2013, and then of course it ushered in the bear market. And so the next argument people are saying is the bear market hasn't lasted long enough, and of course they point to bear market rallies that have happened in the past. And of course the last bear market that we saw, of course prior to 2018, assuming that we are now out of the bear market, the last bear market that they're referencing was the bear market that started in December of 2013. Okay, so. And they say that we haven't seen the bear market didn't last long enough, therefore the bear market is not over because it didn't last as long as this bear market. First of all, I would say no two things are exactly the same. Yes, sometimes history rhymes, but it never repeats itself exactly. So, just saying that because we lasted so long back in 2013 to 2015, doesn't mean that it's going to last that long now. So let's go out to the weekly and let's see exactly how long it lasted. All right, so from the start of the bear market, which again was in December of 2013, to its low, and the low happened, we bottomed out in this bear market in January of 2015. This was the low at $156. That was the low. So that was your bear market. That's where the bull market started. Now, again, it didn't just go parabolic here. It kind of moved sideways here for a little while and then continued to the upside. But certainly the low was right here. So let me go ahead and draw that out. Let's see. So if we go from the top here, we go from December of 2013 to our low in January of 2015. How long is that? That's 406 days. So 406 days, what is that? 365 days we know is a year. So that's what? Excuse me. That's 51 more days. So let's just call it 2 more months. That's 2 months on top of a year, so that's 1 year and 2 months. I'm being gracious there, giving you that full 2 months. So that's 1 year and 2 months. That's basically 14 months that this bear market rally lasted. How long has the bull market lasted here? Or how long did the bear, assuming that we're in a bull market now, how long did the bear market rally last in 2018? All right, so we go from the high, or from the start of the bear market, which was, I'll even be fair, I'll give you an extra month here. Let's say the bear market, it did, I'm not giving you an extra month, it did start in December of 2017, and then let's go to its low, which was right here in December of 2018, December 10th. That's 364 days, almost basically a year. So let's call it 1 year. So we are quite literally 51 days difference. So there's a 51-day difference, and you're telling me because of those 51 days, we can't possibly be done with the bear market rally, which, ignoring the fact that we're already since, if this is still the bear market, then it would be over because it's already been, it's been certainly much more than 51 days. So if we are still in a bear market, you'd have to say it's over now. But just using that logic, let's just again ignore that for a second and say, okay, so we are 51 days shy. Don't you think that the fact that we are quite literally, if we go back to the volume that was taking place back in 2015 during that bear market, so let's go all the way back and look at the volume back in 2015, the bear market that you're referencing that took so long. The volume is 13 million, 24 million. Let's go to the high. We said it was January of 2015 is where it ended, and the highest I can see here in January of 2015 was, sorry, I'm looking there. There we go. January of 2015 was, there it is, was 106 million. 106 million. We are currently sitting at, all the way back up here, and it's taken me forever to get back up. We are currently sitting at 22.1 billion, and our high was 40 billion. But let's just ignore that, and let's just say take half of our high, which was what we're sitting at today, at 22.1 billion. Even if this was 1 billion, that would be literally 10 times higher. 1 billion, and that's just 1 billion. Times that by 22, and you do the math. We're at what? 220% higher? Or excuse me, no. 1 billion would be 10 times higher. 220 billion is 220 times higher. 220 times higher, not percent higher. 220 times higher. So you're going to tell me that a volume of 220 times what it was then, and I know all the arguments about wash trading, but we had wash trading back then. We've always had wash trading, so the percentage is still going to be the same. It's still percentage-wise will be 220 times higher. And even if you want to say I'll even cut that, and let's just say it was 110 times higher. Let's just take half that to say maybe there wasn't as much wash trading back then. You're still 110 times higher, not percent, but times higher. You're going to say that might not account for things accelerating a little bit faster this time? I mean, I would say that just doesn't make any sense. So again, I'm not saying that this can't be a bear market rally and that we can't come back down to new lows. Certainly that's possible. Anything's possible in Bitcoin. I'm just saying I would just urge anybody that's a perma bear in this to just maybe consider that maybe we're seeing all these bullish signs, and maybe we're seeing it technically as well as just, in my opinion, logically, maybe we're seeing that because maybe this is a bull market. Now, again, I will tell you, I will say that I'm wrong on that in a heartbeat if we break below 6,500. I'm not going to hold on to it like some people will. I won't. I'll change, because that's not how you make money. A trader makes money by being flexible. A trader can make money in both markets no matter what, and they're never going all in. They're flexible. So believe you me, I will cut my losses and start making money in the bear market again if and when that does happen in a heartbeat. So I don't have a stake in this game. I have never been a perma bull or perma bear. I'm just saying, please, please, please don't get on my case for saying that my bias is that the bottom is in, because I can talk all day long about technical reasons as to why I believe that. Doesn't mean that what I'm saying is 100% correct and that you might not be right. You might be right. I'm just saying there are a lot of reasons as to why the bottom may in fact be in, and I would just encourage you not to ignore them. That's my only point. All right, quickly getting to some of your questions again. And Scott Lee, I want to address you again because I feel like I didn't mean to ignore you yesterday. I was just in a huge hurry, man. You talked about your Brave browser thing. I tried to answer that. I'm not really sure why you're having issues with Brave browser. If anyone knows, please get back to him. He says that my videos don't show up sometimes on Brave browser. I'd be curious to know if anybody else does see that. And then he asks, I know you're big on privacy, but I'd love to hear a day in the life of your trading career. Super interested in how traders do their thing. As I said in my comment to you, Scott, a day in the life of working is pretty boring, to be honest. Actually, it's nice. I used to be, to give you a little background, I've explained this in the past, but if those of you are interested, I keep getting questions, so I'll just go ahead. My background, I have a degree in finance and in business. Those are that's my degree, but my actual professional career is I'm a retired airline pilot. So that was my career prior to this. I've been trading for a couple decades. I've been trading seriously, day trading, profitable day trading for probably about the last 6 years. And the way that happened was I had as I explained before, I had a medical issue, and I was basically, I had a whole lot of time on my hands because of that medical issue, and I did not, and I had did nothing but study, read books, and hone my skills, and that's how basically I got profitable, consistently profitable day trading. And I also had a mentor. I didn't mention this before, and this is extremely important, probably more important than what I said. I had a mentor that kind of took me under his wing, taught me a lot of things. Somebody that is I still look up to now, still ask questions to now. I hope to one day be anywhere near as good as he is. I'm not, but he kind of took me under his wing, and he taught me. And I will just say that there's if you can find a mentor like that, it's wonderful. But you don't have to have it. It just may take a little bit longer. It certainly increases the learning curve, but you don't have to have that. A day in the life, I basically set a given amount that I want to make in a week, and once I hit that, once I've hit my profit target for the week, I kind of sit back and relax, because trading can be very addictive. You can ignore your family, and you want to always make sure that you're balancing your professional career with your family. In my opinion, again, I'm not preaching to anybody. That's what works for me. And so once I hit that target, I kind of just do family things. But yeah, pretty boring day in the life, I would say. How did I learn to trade? Basically self-taught, as well as had a mentor. My father was a financial planner. He also helped me. So when I say self-taught, I did have a lot of influence. But the crux of it, where I really got my foundation, was reading, and then having a mentor to reinforce those things and bounce things off of. Do I tutor? No, I don't tutor, as I said. What are the 3 most important TA tactics used in crypto? That's a tough question. I'm not sure what you mean by tactics. Do you mean indicators? Do you mean what I use? I'm not sure what you mean by that, but I would say for me, my bread and butter is basically support, resistance. Support and resistance, obviously, moving averages, exponential moving averages. Those are pretty much my bread and butter. Honorable mentions would be, of course, the RSI, of course, the MACD, somewhat the MACD, but basically, and sometimes patterns. So again, I know that's a lot more than 3. Probably not what you wanted to hear. Bollinger Bands, also certainly honorable mention. Sometimes the ratio between longs and shorts, but those are basically it. All right, Nicholas says, thank you, waiting for a break. Also, Bitcoin Cash is ready to break, looking for 488 up or 333 down. Let's take a look. There we go, Bitcoin Cash. Yeah, I mean, it does have what appears to be a descending resistance line here. Of course, this ascending support line here, not really a wedge, but certainly something to keep note of. Has been tested 3 times, so I do put some weight on this descending resistance line here, and clearly the ascending support line has been tested quite a few times. Yeah, it does look like it may want to make a larger move here. I would say, and this is Bitcoin Cash to the dollar, by the way. I would say this thing does want to make a move up. My bias would definitely be a move up. Of course, if this trend line does break, then we're looking for a move down to at least 350. At least 350. We'd be looking for a move down to at least 350. We can see that was resistance here, turned into support here. At least 350, I would say. If it does break down, I'd have to reevaluate at that point, possibly coming back down to sub 300, but I would be surprised if that happens. My bias would be a break to the upside, at least coming up and testing about 440. It does look like it wants to pop up here, test about 440, and again, I'd have to reevaluate at 440. If it can take out 440 decisively, then yeah, we're going to see a quick rise to about 480, 485-ish, somewhere thereabouts. If we can take out this descending resistance line here, and then at that point, guys, Bitcoin Cash very likely wants to run up to about 550-ish, somewhere thereabouts. But we're a long way away from that. We need to see a lot happen in between that. JK says, I read this before, and this is actually JK says, as I walk through the valley of the shadow of death, I fear no bears because I'm blind to BTC sales. My mind and work, and they comfort me because I know I'll hodl my crypto when they come. God. Oh, dude, JK, man, never go away, dude, never go away. That's awesome. Claw the Kitchen says, almost done with Trading in the Zone. Trading in the Zone is an excellent book. Highly recommend Trading in the Zone for everyone that hasn't. I talked to you about this, Claw. Highly recommend that book for anyone that hasn't. It's more of a psychology trading book, but it's or the psychology of trading, I should say. But it's an excellent book, and even as Claw of the Chicken points out here, and it's tough to say your name with a straight face, but as Claw of the Chicken points out here, it is very, very true, actually, to be serious for a second. It is very true. It's one thing to know something. It's another thing to actually understand it. And this book will help you understand it. As much as you may know all the cliche things to say when it comes to emotional trading, you don't really understand it until you, I would say this book gives you a much better understanding. So I would just encourage people to read that. All right, Crypto Mason, again, working. Thank you. I always come back to look more. Thank you, Crypto Mason. I appreciate that. John M. Says, I hope it waits till morning to break out. Well, we broke out a little bit. We'll wait and see how it plays out here. Eddie, great for your analysis. Thanks, Eddie. Ballsy says, thank you, working. If, and that's a big if. Hold on, guys. Okay, sorry, guys. Throat is getting it's killing me. All right, thank you, working. If, and that's a big if, Deutsche Bank were to fail, and light the fuse for financial Armageddon. What does your instinct tell you would happen to Bitcoin price? Yeah, I answered this, and the answer to your question is, and again, that is a big if. I'm not, again, not spreading any FUD to anybody. Very, very big if, but yes, if that were to happen, yes, I think Bitcoin would explode for reasons I've explained in the past, guys. I do think that with all the financial debt that we're seeing worldwide, not just in the United States, but worldwide, and we've seen this tested on smaller levels in places like Kenya and places like Venezuela, when their government currency is just starting to collapse there. We've seen those are the per capita, those are the biggest or some of the biggest Bitcoin markets. So we've seen this tested on a smaller scale. But if that financial Armageddon were to play out in the worldwide, yes, I think Bitcoin would explode. Why do I say that? Yes, gold would likely explode as well. That's always going to be a safe haven asset, always going to be a hedge. But I think people are looking for. We've seen the chink in the armor, so to speak, of gold, and that governments often try to outlaw holding gold and try to repossess all the gold of their citizens. And it's also a pain in the butt if you're trying to buy a gallon of milk, if you're trying to make everyday transactions in your daily life. Try doing that with a bar of gold. It's almost impossible. Bitcoin is, my opinion, the natural evolution to a store of value, to answering all those questions, to be able to have your privacy, carry your wealth wherever you want, you secure your wealth, and also be able to trade back and forth in everyday transactions. I do think Bitcoin answers that problem, and I do think Bitcoin is very, very likely. Again, nothing is a guarantee, but very, very likely the next logical step in people trying to hedge against major financial Armageddon, as you suggest. All right, guys, I got to get going. I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.